Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 10th of July 2023 and here are the top stories for the day. What does the Data Protection Bill imply for privacy? Can threads pose a real threat to Twitter? How will India Inc. fare in Q1 FY24? And what is internationalization of the rupee? Are you sure that your personal information like the details of Aadhaar and PAN card are not in the wrong hands? And are you sure that they will never be misused? Until now, such safety was hard to guarantee, but an attempt is being made to address this and much more. The government is planning to regulate the processing of personal information through a law. The Digital Personal Data Protection Bill got the Union Cabinet's nod last week, and it is likely to be tabled in the upcoming Parliament session. So how different this draft is from the earlier one? And what are the major hits and misses? Debarga Sanyal has the answer.
The draft of the Data Protection Bill, which was in the making for about last 5 years and was withdrawn from Parliament in August last year, is likely to be tabled in the upcoming monsoon session of Parliament. The fresh bill reportedly offers companies a chance to voluntarily disclose data breach and also does away with the criminal provision for it, which was there in the previous draft. But it also empowers the Data Protection Board to impose a penalty of up to 250 crore rupees on organizations for failing to take safeguards to prevent personal data breaches. The bill is being tabled at a time when India is facing an increased number of cyber attacks and data breaches. A recent report by Checkpoint claims that average weekly attacks in India rose by around 18% between January and March 2023 when compared to the same time period in 2022. In an ecosystem where artificial intelligence is rapidly evolving and ChatGPT is scraping data from social media platforms to test its models, the bill has assumed and added urgency. The bill outlines practices for entities that collect personal data, how that data should be stored and processed to ensure there is no breach, as well as rights of the persons whose data is being used. The bill also requires platforms to obtain verifiable parental consent in such manner as may be prescribed before processing any personal data of a child, any user below the age of 18. The final version of the bill is likely to keep the age of parental consent unchanged, notwithstanding multiple companies demanding to reduce it to 16 years. However, as per the latest draft, courts and law enforcement agencies enjoy wide exemptions from key requirements as the bill's requirements do not apply when personal data is processed in the interest of prevention, detection, investigation or prosecution of any offence or contravention of any law, or the processing of personal data by any court or tribunal or any other body in India is necessary for the performance of any judicial or quasi-judicial function. Right to information activists have raised concerns on an amendment to the RTI Act 2005 in the bill that would prohibit government departments from sharing personal information, arguing government departments may refuse to share information that could hold public office holders accountable.
So yes, it is true that the government agencies enjoy wide exceptions, and frankly, it does dent the overall effect of the bill because ultimately, the right to privacy is not just against private corporations. Some of the major cases that happened in relation to data leaks or violation of privacy, where data had been held by the government, where the government or government agency had been the controllers of that data.
Does the bill then have enough to protect individuals' fundamental right to data privacy?
It's too little, too late. The bill talks about a lot of requirements for data controllers. And in that sense, as far as the details of the security practices and procedures that these organizations need to follow, while broadly the government talks about them, but the intricacies and the details of these have not been provided in the bill itself.
Experts also point out that there are major gaps and blind spots in the bill in its current draft.
There are various issues with this bill in its current form. One, of course, that it has created a very vague provision for deemed consent, and that includes giving powers to the government and the government agencies, to be able to deal with the private data of individuals in the manner that they want to without taking any express consent. Additionally, I feel that in terms of creating the whole distinction between sensitive and non-sensitive data, that is not something that has been done. Third point that I feel is the issue of penalties. Requirements and the contours of how those penalties need to be imposed, what would be the criteria, nothing has been provided in detail. Also, I mean, if you look at the fact, the whole constitution of the Data Protection Board is a matter of suspense currently.
Experts therefore believe that while having a data protection policy framework is a major step in itself and definitely a start in the right direction, the provisions and overall structure of the bill in its current form are quite vague. They point out that the bill will need several revisions and amendments in order to provide for more concrete and precise guidelines to help protect India's data privacy.
Twitter too had a brush with hackers early this year. Email addresses of over 235 million Twitter users were put in public by an online hacking forum. That was about 6 months ago. Twitter is now facing another big challenge. It has a new rival, and this time it comes from the stable of mighty Meta. Threads was launched in 100 countries last week, and 10 million people joined in within the first 7 hours of the launch. So is Threads the real threat to Twitter? Ayush Mishra finds out.
Meta Platforms' owned Instagram has unveiled a new microblogging app, Threads. The launch comes at a time when its nearest rival, Twitter, has limited the number of tweets one can read in a day. That's quite a first punch by Meta CEO Mark Zuckerberg, ahead of his much-anticipated cage fight with rival Twitter boss Elon Musk. Twitter has long been the home for journalists, governments, academics, and the public to share information on key issues of the day. But the microblogging landscape changed dramatically since Elon Musk acquired Twitter last year. Twitter now has many new competitors that hope to dethrone the giant. With Threads launch, Twitter has begun to feel the heat. In fact, Twitter has already threatened to sue Meta Platforms against alleged trade secrets or other confidential information. So what threat do Threads pose to Twitter?
There's no question that Twitter is extremely vulnerable at the moment. There's also no question that Meta needs something new, given that the metaverse hasn't really gained any traction whatsoever. Take those two things together and starting Threads makes sense. One thing to be noted, Instagram has a far larger user base than Twitter. How much of that will port, we don't know, from Insta to Threads.
Meta's new text-based microblogging service is closely tied to its photo and video sharing platform, Instagram. So the sign-up process is easy for Instagram users. Threads is positioned as an extension of Instagram platform, though it is a standalone application with features that are identical to Twitter.
Insta's launch of Threads is definitely a threat to Twitter today. What we saw in day one and day two was a lot of users got onboarded onto the platform. I think it will be one of the fastest onboardings to the 10 million mark in the history of social media. And this is on the back of the captive users Instagram already has. Our daily active users, monthly active users on Instagram is so high all over the world.
Threads users can retain their Insta usernames and can invite their Insta followers to the new platform. This ability to retain an existing community in a new platform and offer an experience similar to Twitter, makes Threads a real threat to the former.
We have to ideally look at Threads as an independent app. Obviously, we do have to consider that it's doing what Twitter has been doing since a very long time. Meta has been extremely well known for doing this time and again, where they spot a problem in the industry, let's say on social media. They spotted a problem with uh, TikTok getting banned or TikTok going downhill in a lot of places and whatnot, and then they introduced Reels. The same thing happened with Snapchat and IG stories and whatnot. So they're very quick to adapt. They're very quick to integrate their tools uh, on their existing platforms.
While Threads is gaining more and more users, how it is going to bring new people on the platform remains to be seen. Experts say its integration with Instagram will help them to grow in the future. Time will tell if Threads topple Twitter or if the two will coexist. But before joining the new platform, you should know that to permanently delete your Threads profile, you'll have to delete your Instagram account as well.
Back home, India Inc. will begin the June quarter earnings season from Wednesday, 12th of July. The street expects most sectors to report an in-line set of earnings, thanks to easing commodity cost and overall improvement in macros. The weak demand environment, however, is likely to keep the overall numbers in check. Lavisha Darad and Harshita Singh bring you a report on the likely winners and laggards of the June quarter.
At a time when markets are trading at record highs, India Inc. will kickstart the June quarter earnings season this week. IT majors, Tata Consultancy Services, and HCL Technologies will be the first to report their Q1 FY24 results on Wednesday, July 12th. Brokerages expect Nifty 50 companies to report year-on-year aggregate revenue and PAT growth of up to 8% and 25% respectively for the recently concluded quarter. This will be supported by up to a 30% year-on-year decline in crude oil and metal prices, they said. Sectorally, oil and gas, banks, and auto companies are expected to drive Q1 earnings, while chemicals and metals will likely be the top drags.
We are expecting the first quarter to be in line or better than these expectations, mainly because the companies are going to benefit from a low base. They benefit from low raw material costs as well as a low interest rate scenario. So therefore, earnings expected to be better than the expectations. Secondly, valuations are also fair when you look at the current PE multiples, especially for large caps and mid caps. Small caps are sitting at a very attractive valuation. So, a good entry time before the results kick in full force. Secondly, from a sector perspective, if we have to see the top three sector picks, I would say would be auto, capital goods and banks.
The IT sector especially will be in focus amid rising fears that the global monetary policy tightening still has a long way to go. Brokerages estimate the IT sector's constant currency revenue to be broadly flat on a quarter-on-quarter basis, while profit for Tier 1 IT companies is likely to decline 2 to 4% sequentially amid weak demand.
IT, quarter one is usually a strong quarter, but this time we are not expecting any major surprise because of the challenging macro environment. Financially, if we see, then revenue and EBIT margins are to be flat sequentially, and that is because of the delay in client spending and soft demand. However, we feel that the negative scenario will fade away post recovery in second half of FY24, and that would be because of the easing inflation and global growth catching up.
Today, on July 10th, global cues, foreign flows, and oil prices will guide domestic markets.
He's making plans for an early retirement. Business Standard.
Let us turn our gaze to Mint Street now. The RBI's interdepartmental group last week said that the Indian rupee has the potential to become an internationalized currency. This comes at a time when several countries are scrambling to find an alternative to the US dollar in international transactions in the light of sanctions on Russia for the war in Ukraine. But what does the internationalization of the rupee mean? Raghav Agarwal explains it.
Internationalization is a process that involves increasing the use of a currency for cross-border transactions. For the rupee, it means that more and more international payments start taking place in the Indian currency. This involves promoting the rupee for current account transactions and foreign trade. These transactions will have to take place between resident and non-resident Indians. This requires a further opening up of the currency settlement and a strong currency swap and forex market. It would also require full convertibility of the currency and a restriction-free cross-border transaction of funds. India only allows full convertibility on current accounts. To make the rupee more international, it will also have to open it for capital accounts. Currently, the US dollar, the euro, the Japanese yen, and the pound sterling are the leading reserve currencies in the world. China is also trying to make its currency, renminbi, more international. The US dollar enjoys the highest privilege among all currencies in the world. It is used in most global transactions. This is mainly due to the size of the US economy, the reach of its financial networks, and the depth and liquidity of its financial markets. Importantly, the dollar's dominance can also be credited to the lack of good alternatives. The RBI's working group said that the obvious challenger to the US dollar is the Chinese renminbi. However, it will depend on how the trade war between the two countries pans out. Also, the resilience of the Chinese financial system is yet to be tested in the long run. This will reduce the currency risk of Indian businesses by protecting them against currency volatility. It will also reduce the need to maintain foreign reserves, making India more insulated from external shocks. It will also provide India with higher bargaining power in international markets. Interestingly, the Indian rupee was the legal tender in Gulf countries, including Kuwait, Bahrain, Qatar, and the UAE, till the early 1970s. In 1959, the center allowed the RBI to issue special notes only for the Gulf region. The currency had the same value as the Indian rupee and was known as the Gulf rupee or external rupee.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But in 1966, the Indian currency was devalued, and by the early 1970s, countries stopped using the Gulf rupee as their currency. But things are looking up for the Indian rupee again now. That's all for today. For more news and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.